Hello, everyone. Welcome to the FarmRaise podcast. FarmRaise helps farmers get funding, and these podcasts will explain different aspects of farm funding and financing. We'll talk to lenders and grant programs to get you the in-depth information you need. Today, we're talking with Alissa Welker at Steward. Steward is a private lender working with regenerative farmers, ranchers, fishermen, and producers to provide capital to expand and sustain their businesses. Visit them at gosteward.com. That's GOSTEWARD.com. So, Alissa, tell us, what underwriting means to you.
Yep, definitely. So, you ask 5 different lenders, you're going to get 5 slightly different processes for what underwriting a loan looks like. What's very different about Steward is we are basically not playing by the rules of just a traditional bank or lender. Our underwriting process includes both agricultural as well as financial due diligence. So basically, the first step when you, as a potential borrower, applies, you're going to hop on the phone call with a farmer team member from Steward that basically has a background in farm business, in agriculture, understands the needs of ag businesses, and kind of walks you through the process, as well as kind of really talks about your farm business plan and what's happening on the farm. So that agricultural due diligence is kind of that first step and is a really key piece of the Steward loan process. And then in terms of financial underwriting and financial diligence, a lot of times banks will depend, heavily just at looking at previous numbers, just at looking at loan to asset ratios, as well as debt coverage. Whereas we're looking at those things, but we're also looking at projected revenue and understanding that in order for many of these ag businesses to scale, you really need that capital. So we're also underwriting, looking at the bigger picture and what's possible with growth versus just what exists to date.
Interesting. And I mean, do you work with, beginning farmers, or are you looking for farmers with more of a track record?
Yeah, so at Steward, we work with a range of borrowers, definitely with some. So first of all, when I say borrowers, I say that rather than just farmers, because if you are a rancher, fishery, and aquaculture, even food hub out there that's listening, we kind of work with a range of food and ag projects across that scale. We require at least 3 years of farm business management experience, or a managing partner that also has that experience, or bringing on that experience onto the team. So unfortunately, we're typically not going to be a fit for somebody that has no commercial ag experience and is just looking to start up. But let's say it's a farmer that has been working and apprenticing on a number of different farms through their career. They have experience managing the farm business, and now they're looking to go out on their own or start something new. We do consider new businesses in that sense. So all the way from startups with experienced farmers to businesses that are well established and looking to scale is kind of who we really work with.
Okay. And, I know that you have a focus on sustainable agriculture, on regenerative agriculture. What do those things mean to you?
Yeah, that's a great question. Everybody has a different definition of what sustainable and regenerative means. So to Steward, that means essentially we're working with growers and businesses that adopt practices that are self-sustaining and environmentally regenerative. So businesses should be using a systematic approach to focus on soil health and ecosystem management, and really taking into account public health, human communities, animal welfare. There's a lot of things we do support, and sometimes it's easier to talk about what we don't support. So first of all, we're not a great fit for you, not a lender for kind of industrial commodity row crop production. we kind of take the perspective that a lot of those borrowers or a lot of those farmers can go to their ag lenders. So we work with the misfits of agriculture, all of those that have a diversified farming operation that they go to their local ag lender and they're just confused. Why would you want to finish cow on pasture, beef on pasture, rather than taking to a feedlot and having to finance it for an extra 18 months, for example? That also kind of brings us into the next one of the things we don't support feedlots or concentrated animal feeding operations. We do focus on pasture raised protein. And then also, we do not support farmers that are using synthetic fertilizer and pesticide use. Farms aren't required to be certified organic, but we do require only biological methods of pest control. And then really kind of working with farmers that, like I said, focus on soil health, focus on holistic farm management, and kind of the farm ecosystem as a whole.
Interesting. Thanks. Okay, so I mean, understanding now the sort of type of producers that you do and don't work with, can you talk a bit about the other side of the equation, which is the lenders? I know you mentioned value driven lenders. Can you talk more about what type of who they
Yep.
are?
Yeah, definitely. And that's one of the really interesting things about Steward. My background is in agriculture and I'm working with our ag borrowers at Steward, but there's a whole other side of the business where our platform is only possible because we have the lenders. So how it works, as I said, Steward does the underwriting, and once a loan is approved, most of our loans are funded through a participated loan model, which essentially means that folks with as little as $100 can put their money into these loans and essentially buy a piece of the loan. Anybody, technically, the financial definition is you have to be a sophisticated lender in order to participate, which essentially means you have the mental and financial wherewithal or ability to do that. So oftentimes our projects lenders are both community members of these farms that have been approved for a loan by Steward and are raising funds for their loan, as well as Steward has a network of over 1,000 lenders across the country that regularly put their money into these projects, and they're really kind of, as mentioned earlier, value driven lenders wanting to do something good with their money, but also wanting to see a potential return on it rather than just donating.
Great. Okay, interesting. And I guess that makes me think I want to get to a bit more about your process. But before that, um, talk to me about how Steward fits into the overall ag funding landscape, if you would.
Yep, definitely. So it in my view and in Steward's view, the overall ag funding landscape is very much geared towards the conventional commodity crop producer that can go to their local ag lending bank and get a revolving line of credit. Steward aims to be a partner for farms that otherwise kind of aren't a fit for that traditional ag lender because maybe they're doing something different, or maybe they just aren't established enough to get a traditional small business loan if they're kind of outside of the traditional commodity ag space. So we're working with producers, food hubs, fisheries, aquaculture. As mentioned earlier, we take all the misfits in the agriculture system that can't find funding elsewhere. So really good examples are diversified veggie operations, or somebody that wants to finish their beef on pasture. We've talked actually with a couple of ranchers that have gone to their ag lender and just can't get their loan extended for the necessary extra time to finish beef on pasture rather than taking them to a feedlot. So we are kind of viewing ourselves as the lender that works with the diversified producer, or folks that are kind of working outside of that traditional commodity system.
Great. So you talked about your underwriting process. and you talked about a phone call that you have very early on with a farmer. Could you just take us through what a farmer a producer can expect, in interacting with you guys?
Yeah, definitely. So typically the first step that we ask of producers or potential borrowers applying is to complete, it's about a 20 to 30 minute online application, which you can find at gosteward.com. Once that application's completed, we typically have a really quick turnaround of within 1 to 2 business days of requesting next steps. And that would either be asking for additional information, or going on ahead and sending a meeting link to schedule a call with one of our ag team members. And from there, that call is kind of talking through the farm business and getting more of the qualitative information about the ag business. And then after that, your steward account manager will request certain financial documents based on the size of your loan request. And once we receive those, we will then kind of bring in our financial underwriting team. They'll do an initial review, and you'll work with your steward account manager to answer any additional questions, facilitate any phone calls with other diligence team members needed, and walk you through all the way to the final approval of the loan. One of the things that's really unique about Steward as well is every loan is different. All terms are different. One of the things that our finance team, who also has a background in working with diversified producers, does really well is not necessarily making the business fit certain terms, but making the terms fit what the business needs, in terms of, what does the deferment period look like, as well as, the length of the loan and different terms for the loan.
Got it.
And one more quick thing to add, JC, one of the most common questions we get from farmers is just what do our average loan terms look like?
Yes.
As I mentioned before, it is so dependent on each farm business or food hub or fishery that we're working with. But kind of average, we're looking at about a 5-year term, 8% interest, and then anywhere from a 3 to 9 month deferment period. That interest can also range anywhere from about 5 to 10%. And one of the most common questions I get after that, kind of explaining what those terms look like, one is why is the interest rate so high? And that is one of the things that we're constantly looking at, as most farms and businesses are able to go to bank where kind of interest rates are federally regulated and federally subsidized. Whereas what's different with Steward is the funding is actually coming from individuals. So if you think about it as, okay, you as an individual with your money, would you, what interest rate would you need to entice you to take a chance and lend to a farm business? That's kind of where our interest rates land. The borrowers or the lenders actually get all of that interest rate back. None of that goes to Steward. We have a separate 3% origination fee on our loans. So it's all based on basically what we've seen and what the lenders need to see in order to participate. So that's kind of a little bit of information on what the terms look like. But as I said, it's wholly dependent on the size and scale of the business, what the collateral is. They're all interest-bearing secured loans. So we do take a lien on business assets and land, depending on what the loan is for.
Good. That is useful. That's great. Well, you're absolutely right. That's sort of the environment that we look at FarmRaise as well, and it's necessary work. And Alissa, you're a great brand ambassador for Steward. So I mean, thank you so much, for talking to me and answering all these great questions. We'll have a link, with this podcast so that farmers can, listening to this can get to you easily. And I just want to say thank you so much. Well, thanks so much for listening to that interview with Alissa Welker at Steward. I hope you found it useful. Be sure to subscribe so that you're notified when a new podcast comes out. Remember to follow us on Facebook, Twitter, and Instagram to keep up to speed on all aspects of farm funding. And visit us at farmraise.com. to learn more about what we can do for you.